Hey guys. All content discussed is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive in. Some pretty big changes took place today. Let's begin with the basics. The stock market remained relatively unchanged today as hesitation persists in traders' minds in anticipation for the Jackson Hole event. Biden announced that he plans to release a package that will forgive $10,000 in student debt and double of that amount of Pell Grant recipients. Biden paused repayments one final time through December 31st. Now, we have been speaking a lot lately about the energy crisis taking place in Europe, but we have completely ignored and sidelined the one taking place in the United States. America has been undergoing a series of really dangerous events these past few months that have gone unreported and under the radar. There is a massive amount of electricity shutoffs happening all across the states, even as the heat waves devastate the country. Around 20 million households in the United States, or 1 in 6 homes, have fallen behind on utility bills. This is one of the biggest crises happening that nobody is talking about nearly enough. One of the reasons this is happening is because of the soaring prices of natural gas. Europe is undergoing the same crisis and their policymakers are throwing billions of euros in aid to help struggling households, but there hasn't been anything similarly done here in the States. The thing about these utility shutoffs is that they can have deadly consequences. This summer, temperatures shattered records and we saw reported cases of people needing medical help as a result of heat exposure. The average price consumers paid for electricity surged 15% in July from a year earlier, and that's taking into consideration that there is existing regulation that prevents providers to immediately pass on higher fuel costs. The recent rate hikes may be just the beginning of a grander and longer, more expensive cost for fuel. Germany and the UK has both already started handing out support to struggling households. There is no reason for the US to continue allowing people to get cut off because they cannot pay the bills due to the extreme high costs of energy, especially when you consider that investor-owned utilities enjoy limited repercussions for accumulating debt from unpaid customer bills. I will be monitoring this situation as it continues to develop. Moving on to US petroleum, we have shipped out the most crude and refined oil products in 3 decades. This is because energy-starved economies are turning to American supplies as a way to stave off shortages. More than 11 million barrels of fuel have left the ports on a daily basis last week for overseas markets. This was the most in data tracing it back since 1991. Diesel led the surge with a 20% hump in exports while crude exceeded 4 million barrels per day for a second straight week. These numbers are also expected to continue growing into the future. I want to talk a little bit about markets because more and more alarms are now going off and even Wall Street is beginning to warn investors and the general public that stocks are out of touch with real-life economics, something I have been fastidiously repeating almost every day for an entire year. That's right, Morgan Stanley and BlackRock analysts are saying that equity valuations and market fundamentals are not matching or in line with each other, and this is why we call it a disconnection from reality. Valuations have just been pumped to the moon for years, even before the pandemic began, as a result of monetary policy and Wall Street influence. As a result, the normal way of valuing equities has lost its course, and companies that weren't even cash flow positive often outperformed those that were. A couple weeks ago, Morgan Stanley's Mike Wilson said that valuations don't resemble the current economic and earnings landscape. In more dumbed-down words for the unwrinkled, what Wilson is saying is that the bear market is not yet over. Expect major and serious pullbacks that could have us reach even lower lows than those we have tested at our worst this year. Markets are getting ahead of themselves as they believe to have priced in Fed rate hikes after July's reading, but as Wilson said, the reading hasn't eased fast enough, so it's unlikely to justify a dovish pivot by the Fed. This is funny because I don't know if you guys remember, but a while back, BlackRock announced that they would not be buying the dip because they expected bigger retracements. BlackRock confirmed their stance in a recent interview, stating, and I quote, "We are not chasing the rally because the market expectations for a dovish Fed pivot are premature. We think a pivot will come later as the Fed is for now responding to pressure to tame inflation." The second reason is because we see the market's views on earnings as overly optimistic. This is exactly the same stance as Morgan Stanley's, which we just discussed a minute ago. I have been exploring all the corners on the internet, seeing what the most powerful firms and most celebrated investors are saying, and trust me when I tell you, none of them are cheering. None of them seem positive or bullish, and most certainly none of them seem to be buying the dip like retail investors are saying. Now, I must also remind you I am talking about stocks in general, not AMC or GameStop, because I know a couple Eugenes are going to purposely misinterpret my message. But yes, Wall Street and friends seem to know what's coming and that we are about to get slammed back to reality, so ease off on the bullish sentiment and get comfortable with the possibility that you will be very uncomfortable looking at your portfolio in the near future. Now, let's talk about AMC for a bit, and in particular, APE. I don't know what it is with people loving to disappoint themselves and set each other for failure, but once again I must come in to remind you guys not to set up any dates for a squeeze. Already I am getting bombarded with questions about what I think about a supposed APE squeeze within 90 days or so because people on social media have reasoned this to be a fact that will happen 100% guarantee. That's right, almost 2 years into this play and still the most basic and fundamental lessons continue to be ignored. Can APE squeeze within 90 days? Absolutely yes, it could. The circumstances for it are unknown to me, as anything really can set these meme stocks ablaze. But I am not going to hype anything up nor set myself for disappointment, as that always leads to periods of great depression within the communities. I simply buy and hold my shares no matter what. And to be honest with you, when the stocks go up, I slow down or even fully stop buying shares. I truly enjoy watching share prices fall for AMC and in particular, GameStop. This is because it enhances what I get from my limited buying power. Since I like to buy in chunks, even a single dollar difference can oftentimes differentiate how many shares I receive for my money. Stop trusting any and all dates given out, especially by YouTubers. Not that I watch any, but you guys must have seen how many have been saying nonsensical stuff as of late. Please think for yourselves a bit and reason things out a bit. Something funny I came across was that the SEC's ethics office was voted the most useless office in America by an industry poll for the 5th year in a row. The polling wasn't even close. Almost a full 50% of correspondents voted the SEC as the most useless office, with the other 50% being spread around a mix of many other agencies and clubs. GameStop made the news today, after it was reported by the Wall Street Journal that the video game retailer is boosting compensation for some store employees with raises and even shares. GameStop plans to reward thousands of employees as they look to become profitable under the new leadership. They are trying to motivate and retain the employees at its stores and plan to award stock to all of its store leaders in the United States and give raises to some senior store staff. Store leaders will receive up to $21,000 in stock, which will vest over 3 annual installments. CEO Matt Furlong said the financial rewards will start next month, though he didn't specify what amount of time employees would need to have worked at the company to qualify for the raises. He said in a memo, and I quote, "After spending a year strengthening our assortment, infrastructure and tech capabilities, we are now focused on achieving profitability, launching proprietary products, leveraging our brand in new ways and investing in our stores while we also continue evolving our e-commerce and digital asset offerings, keeping our store fleet critical to GameStop's value proposition." GameStop is set to invest between $45 million and $50 million in the new employee compensation initiative. That is all I have for you guys today. Make sure to check out my Discord and come check out my day trade alerts. Thank you all for making it to the end. Come over to my Discord and check it out. Other than that, I hope to see you tomorrow. Enjoy the rest of your day and to the moon.